Welcome back. President Trump is trying to clean up his self-made trade crisis. First, he touted what he called an incredible deal to pause the trade war with China over the weekend. But then Mr. Trump helped set off investor jitters with tweets yesterday renewing tariff threats if a deal isn't reached, calling himself a tariff man. So now he's trying to change his tone. President Trump tweeted this morning that he sees a, quote, very strong signals from China to pause the trade war, quote, not to sound naive or anything, but I believe President Xi meant every word of what he said at our long and hopefully historic meeting, all subjects discussed. Chinese government said today that it's confident in the trade talks, but offered little clarity on what exactly they agreed to or purported to even talk about. Out of all the news this week, from former President George H.W.'s funeral to the latest developments in the Mueller probe, this is arguably the most consequential for your pocketbook and, frankly, for the entire global economy. I'm joined now by Greg Ip. He's chief economics commentator for the Wall Street Journal. Greg, good to see you, sir.
Hey, Chuck.
So help me understand this a little bit. I guess the best explanation I've understood is the president got, I guess the phrase is, got out over his skis a little bit. Before the Chinese were ready to announce. Is this naivete about the Chinese or just maybe inexperience on how to deal with the Chinese?
I think it's a product of the unusual way negotiations are conducted under this administration. When you're entering a very complex negotiation, and they don't come much more complex than the U.S.-China economic relationship, you typically have your lower-level officials spend literally months in hard negotiations, hammering out details. Then the presidents get together and they sign off on what everybody agrees you said you would do.
Maybe one sticking point that has to be done on the leader-to-leader level.
Correct.
Right? Yeah.
Here we're doing it kind of backwards. The presidents get together, they agree, here's the agenda, here's what we're going to talk about, then they send their officials out to actually do the hard negotiating. If you look at Trump's tweets, even though the tone keeps changing, the substance is always just the same. We had discussions to talk about these things. Right. And where this will all sort of like end up is the key question. What in the end will the Chinese agree to do relative to what the U.S. wants them to do? And can the United States, can Trump accept that as a deal?
You know, during the Cold War, the assumption was if we were going to go into this sort of back and forth, this decision to, you know, spend and spend and spend, and the assumption was they're going to go into bankruptcy before we do. Who's got the better hand here in these negotiations, China or the United States?
There isn't a good template for this, Chuck. In the Cold War, you would have extremely tense negotiations on things like nuclear weapons, but the economic fallout was limited because the Soviet Union was basically hermetically sealed. It didn't trade with the West. China is heavily integrated in the world economy, heavily integrated in the U.S. economy. The Dow goes up and down because the outcome of these negotiations matter for U.S. companies and U.S. consumers. Now, if you look at the raw numbers, the U.S. should have the leverage. U.S. exports to China are less than 1% of GDP. Their exports to us are about 4% of GDP. But having leverage is one thing. Knowing how to use it is another. The U.S. needs to be careful that what it asks for is deliverable. And on that list, there's a whole, continuum. Some things are easy. China says, you want us to buy more soybeans and liquefied natural gas? Easy. Some things a little harder. You want us to end joint venture requirements, lower some of our tariffs? Well, yeah, we can probably do that. Mm-hmm. And then there are things that are really hard. A big problem for the United States is forced technology transfer. The Chinese say, we don't do it. We don't force anybody to transfer anything. They do it voluntarily. And if you're saying give up our competition authorities and our sovereign rights, we can't do that.
Well, what's voluntarily? Voluntarily, China says it's voluntarily. If you want this amount of money for your business, then you have to give us this. Is that really voluntarily, or is that a bit of, extortion?
And I think that is what is going to be really hard to decide in 90 days. And if you listen to the different voices coming out of this administration, we had John Bolton speaking at one of our events yesterday, very hawkish. He was saying it's not just about them buying $1 trillion worth of stuff. It's about fundamental aspects of their behavior. And then Steve Mnuchin, the Treasury Secretary, sounding quite a bit more positive, saying they will buy $1 trillion of our stuff. Which, between those two polls, where does the president come down?
you know, in previous standoffs, the United States usually has more leverage because we're representing a larger bloc of other countries. It doesn't seem to be that we've made the decision to do. We're not the only country that doesn't like China's trade practices, but we seem to be the only one fighting it this hard.
That's right. And to date, that's been kind of a lost opportunity. But
That's what it looks to me.
There are positive signs on that front. First of all, administration officials have played up the fact that in Buenos Aires, there was a joint agreement the World Trade Organization needs to be fixed because it'll allow China to get away with too much stuff. Right. And if you talk to people in the European Union, even in Canada, Japan, they too are coming around to the view that China's a real problem and there needs to be action. The question is this administration prepared to reach out to those allies, pull back from some of the friction it's created on things like steel tariffs and aluminum tariffs, and form that united front? It's possible. Will it be done? To be seen.
What are the markets truly reacting to? The uncertainty or fear of the outcome?
It's a little bit of both. The fact of the matter is the raw numbers are not big enough to really shake up an economy as big as ours. You know, it's somewhere between 0.1%, best case, 1%, worst case. We've dealt with much worse things. But it comes at a time when there's a lot of other uncertainty. The global economy is slowing. Yeah. The Federal Reserve is raising interest rates. Housing market is slowing. The fiscal stimulus from tax cuts is fading. You layer on a lot of protectionism and tension. It's just basically an ugly kind of mixture for investors.
All right, Greg Gipp. Good to see you.
All right.
It's been a while, but I always appreciate your expertise and perspective. Good to have you here. Thank you, sir. Hello, YouTubers. If you're watching this, it means you've checked out our channel, so thank you. Now do me a favor, subscribe by clicking on that button down there. Click on any of the videos to watch the latest interviews and highlights from MTP Daily and MSNBC. You can get more Meet the Press content every morning in the First Read newsletter. If you're tired of content that you don't know anything about where it came from, you don't have to have that problem with us. NBC News, MSNBC, MTP, and the Meet the Press mindset right here for you on YouTube. Subscribe now.